Good afternoon, everybody. My name is Peter Mullen, and I'm going to get us started on our webinar today. It's on the basics of banking, and this is a great topic that will help us get some really good basic information about a lot of the retail banking industry. I received your questions for those that register. Everyone's registered, but some good questions in the registration. I'd like to start off by introducing myself again. My name is Peter Mullen, and I'm one of the counselors here at American Consumer Credit Counseling. Been here for a number of years, and what I do is both counseling and providing free financial education, really all over, not only just Massachusetts where I am, but really all over the country now, which is great. This is our 6th webinar. I'm happy to say we do 2 every month. So to tell you briefly about the organization I work for, it's a nonprofit that's turning 30 this year, which I know as I grew up, we used to say don't trust anyone over 30, but this is different. This is a business that's 30 years old, and so it has a great reputation. What we do here is we do provide free financial education like this, counseling for helping people with like money management, personal counseling, reverse mortgages, student loans, etc. So that's what we do. And I'm glad you joined us today. So let me just tell you what the expectations are for how we will work, at least in terms of our interaction today. Right now, you're in a listen-only mode, but at multiple times, I will ask all of you for any of your questions. And again, we'll take as many as we can. I think this topic today will have some great stuff in it, but it will allow you to ask some good things. And so I'm working with my colleague, her name is Maddie, and she's going to help assist in the condensing down of some of the questions that we get and pass them over to me, and we'll take them and then we'll move on. Also, I have from the registrations about 6 questions that have come in through that. So I will also use some of our time to address them or take them when they kind of come up during the session. So again, I welcome you today. We have about 40 people registered, which is great. And we have people across 16 states. So I always find that to be fun. The most current or the most numbers are really from locally here in Massachusetts, New York. We have a bunch from Texas, Oregon, Utah, Pennsylvania, Illinois, and then a bunch of one-offs all over the country, 16 different states. So thank you for joining us, and I hope to see you at future times as well. All right, so let's get started with our session today and talk about the main things having to do with banking. Okay, so our goals that we have for today is to talk about the main products and services that are offered by banks and credit unions. So that's really going to be our focus. There's, as you'll see a little bit later, all kinds of banks out there, but really the ones we want to just focus on today are really the banks and credit unions, which are the typical retail type of banks that you are probably involved with. The good thing is also to recognize there's many choices available, and that's part of what your questions were for me so far. Hey, what are my choices? What are the advantages and disadvantages, the pros and cons? And I'll break it up today by largely looking at it from your perspective as a customer. What are some of the things that you see or can see? The institutional perspective is what do the banks or the retail lenders, what do they offer? Talk about some of their products and services, and then just some of the challenges that you have as you're the customer. You get to decide. I don't really consider it a challenge. I consider it just a little bit of homework by which you can pick the best combo that works for you. So today, at the end of our seminar today, it goes an hour. It'll end at 4 o'clock Eastern Standard Time. You will get a copy of this PowerPoint deck. You'll also get a link to this webinar. You're going to get a handout, which we will just refer to today. It's called the Cash Course Comparison, which is really a good sheet, which I hope you all take away as a to-do, meaning that you can help evaluate if you're in the investigation side of looking at which do I pick, which bank, which credit union. Use that as a way to help you figure that out. And then finally, an evaluation and survey you'll get after this webinar is over, as well as we're using a new rating system too, which I hope you'll give us a minute of your time, about 5-star rating or a rating that you have, very much like Facebook. We're all doing that today, and it's really a great way for us as a nonprofit to receive your feedback and help encourage, hopefully, funding for us so this remains free for you. So the way I want to start today is to think about, as I say, follow the money. And for me, that means like, why do people typically pick banks? And I was starting to kind of think through that, and I think that the main things that I came up with is people are often thinking about as a place to gain money, you gain interest, or you a place to keep your money. Unfortunately, it's also, so that's gains, and there's also what I call losses or fees. They're also concerned about not paying too many of those. Banks are often used for our convenience. It's a place to not only hold your money, but it's also a place that I hope that people use it as a way to keep your savings, checking, other types of things. And another thing that banks in general do for us is they give us the safety and security that maybe your own mattress doesn't do. As we will see, the interest rates currently are not all that high, so I think maybe your mattress might even make more money than the bank might. But please be advised that there's lots of other reasons to keep your money in a bank other than simply the interest. On the other side, on the right, is the retail financial institutions, and that's what these both are. Credit unions and banks are retail institutions, and they really are obviously in this business for the money. They take your money, as you know, and they lend it back out, make profits from that. They offer all kinds of products and services that we will go over, and they obviously offer safety and security as well. So on a high level, this is the reason why, what we're here today to talk about, and we're going to go in more detail. I'll go over a few things on the next slide, and then I'll open it up for your questions right from the get-go. And if I don't hear any, I will just raise up some of the questions you asked on the registration, okay? So I broke it out again, like I said, from your perspective as customers in terms of gains and losses. I thought it was kind of a nice way to break it up. When it's really not losses, it's really fees or costs, but gains and losses sounded better. So what's on the gain side? And these I will go over in a little bit more detail, but people asked a lot about this. Excuse me, what kind of interest can I get? What about these certain types of investments and so on? So I figured I'd talk about these three I's: interest, investments, and insurance. Well, on a high level, interest is obviously what you gain on your deposits in the bank. And I think you all know this, but that's not a high money maker today. It's like extremely, extremely low. So if you're looking to get rich off of your deposits, I don't think banks or credit unions are the place to go. You get money, but very, very little. I think inflation is far greater right now than what you gain on your interest. Investments are products that you buy usually through a bank. In most cases, it depends on the bank or the credit union, but most of them don't offer a product. It's usually that you can get the product through them. It's very much like, for those that are familiar with mortgages, it's very familiar like with mortgages. When you buy a mortgage from a bank, you don't get the money out of that bank. They, in fact, are borrowing it from the Fed. Fannie Mae, Freddie Mac, Ginnie Mae, those are all the ones that have the money, and they're just nothing more than middlemen for it. Same thing on investments. We'll talk more about them, but in general, just for up front, if you do buy an investment through a bank or a credit union, in general, the general way you can think about investments anywhere is the longer you keep your money tied up into an investment, the greater the return you'll get back. So people asked about CDs, certificates of deposit. Well, just one example of that as to give you is that if you keep it for 1 year, you might get 0.5% a return on your interest. If you keep it for 5 years, I know specifically, I looked and looked, the biggest I could find was a 1% CD on $5,000 or more for 5 years. So think of that. You keep $5,000 tied up for 5 years and you get $50 back. It's not a lot of money. The other thing to think about on investments is passive versus active. If you get investments, which again, we'll talk in more detail, that are not managed by a person, but more by a computer, it's called passive. And that generally is cheaper for you to buy into and is done by a computer algorithm. If you ever go to the point of having a person involved, that's called an investment manager. It's called actively managed. And those hopefully give you a better return, but you have to pay a lot more money for them, okay? So that's kind of the ins and outs of those two. And then finally on insurance, just to make the note that Everything's insured, which is great, whether you're a bank or a credit union. Both of them are insured, and they're both insured up to $250,000. For the banks, it's by the FDIC, and for credit unions, it's by the National Credit Union Association. So, hey, if you have less than 250, nothing to worry about. But if you happen to have $500,000 in cash, I would suggest you spread it across two different places. Let's talk about the losses side of the fees. And these are the things that a lot of people, again, ask about. And really, it's just an amazing thing. If you're trying to distinguish between what place I should go to, where should I park my money, unfortunately, the upside is not that great, meaning there's not a lot of gains on the interest and investment side. But there is a lot of fees on the loss side. So just to cover some of them quickly, you've heard of some I found, but I'm going to tell you some less common ones too. But you can find examples between credit unions and banks where they really distinguish themselves. Some charge you for monthly maintenance. Some charge you for a minimum deposit. You have to have either 25 or 50 that sits in there all the time. Once you go below the 50, they charge you. Some of them charge you for checks, some don't. Some charge you for online banking fees. You're trying to get away from the paper, but they charge you for that. As you'll later see, sometimes they charge you for the paper. So you can be charged either way. Obviously, bouncing a check, where you put in a check that doesn't have money behind it, that's a common place to charge you 35 or 40 bucks. Overdraft fees, if you take out, again, more than you really have, or insufficient funds. Some places I've even seen teller fees. We don't want you to talk to a human, but if you do, that will cost you. So account reconciliation, if you don't reconcile your checkbook and you want them to do it, that's a service. ATM, as you probably all know, you can have within the network fees or out of the network fees. Some banks even go as far as to charge you with a fee if you don't have activity over a certain period. And then finally, trying to do a cashier's check. The point about all this is I'm just making a laundry list here. Not that you're going to memorize it, but I am going to provide you with a sheet, which I'm going to show you in a second. Not show you, but tell you about it, which is what you should be doing, checking off which one of these things apply to you or not. On the other side, again, this is, what I try to pull out less common fees, but it drives me crazy to think about. Some places even charge you money for you putting money in their bank or credit union. I've seen some. It's crazy. Some will hit you for too many inquiries or too many transfers. You try to have a gift card purchase processed or try to get the money from it, they may charge you for that. Photocopy fee, return mail fees, all kinds of things you can see for yourself. Well, what I wanted to point out to you, and this is an attachment, by the way, that will come to you when this session is over. I think you can pull it up right now. I urge you to take a look at this. So this is kind of like your homework for today, for those that are really interested. By going ahead and filling out this sheet, you can go ahead and do a little research and compare Bank A to Bank B to Credit Union A or B, and start to see how they compare amongst these dozens and dozens of fees. So again, I guess in summary, I'd say to start, there's not a lot to distinguish on the upside, but there is more to distinguish on the loss side. Okay, so what I want to do next, or actually this is what I want to do next. I want to actually ask if you have any questions. So I'm going to right now go to the chat and ask if anyone has any questions, and then that will open up this to you. Okay, so let me just type this in. Are there any questions so far? All right, I'm going to send that out to all, and I've asked Maddie if she would kind of help me in the management of these questions as they come through. So please ask some of your questions. While they're coming in, let me answer some of the questions that came in on the registration. Few of them that came in. Overdrafts, some people asked. They didn't say what, they just asked about overdrafts. Well, obviously, you have to do a little bit of homework. That's really on you. How do I know which is better than the other? You have to simply do some comparisons, do some research. You could even use this list here as like a laundry list of asking the local bank or local credit union. Go right up to them and say, do you charge for these things? Or, because sometimes these things are hidden in kind of a smaller print, okay? A lot of people asked, or a couple of people asked about the pros and cons of credit unions versus banks. That's coming up next. So hold on to that one. A number of people asked about loans and mortgages at banks or credit unions. And again, just to tell you, I don't know of any advantage or disadvantage whether you go through a bank or a credit union on mortgages, except for the fact that maybe on the credit union, if you have a relationship with them, there might be things that go in your favor. Maddie, are there any questions so far coming in? Okay, here's a question that came in. What are your thoughts on high yield savings accounts? As you mentioned, interest rates are not high. Okay, that's an example of one of the investments. And I would just say that, like anything else, you just need to do your shopping around. You need to look around as to what is even available. Yes, we'll talk a little bit more about investments in the next slide, but the fact is, it's probably not going to be very high. The interest rates are so low right now that all that means every single facility on the paying outside, meaning what you gain, you as a customer, is extremely low. So there's, it's a matter of the simple formula like I have on this page here. The longer you're willing to commit your money into an investment, the greater return. The second part that goes with that is if you are willing to take a higher level of risk, and if the investment is something that's like, for instance, these investments in a bank, they're guaranteed. Most of them are guaranteed by the Fed. You have to look at the small print. But if there's not as many guarantees, I'll give you an example. When we talk about banks in a second, there's such a thing called a shadow bank. Some that don't have all the same rules and regs as all regular retail banks do. Therefore, they can offer you higher investment yields, but at a higher risk. So that's all the yin and the yang of it. You got to do your research to find those out. Other questions at this point, or I'll move on? Okay, so let's move on to for right now and look for more questions to come in a minute. All right, so going back now to the financial institutions. We're talking today about retail banks and credit unions. But I wanted you to be aware of within the whole family and universe of banks, there's all kinds of things that are out there, right? And I want to just list them for you, just say that I've noted them. Commercial banks, shadow banks, investment banks, cooperative banks, savings and loans, also known as thrifts, central banks are the much larger banks. So some of these you would shop at and some you wouldn't. And part of your whole mission, again, is like anything else. It's like going into a restaurant and you saying to me, Peter, what should I eat today? Well, I can't really advise you what you should eat. You would have to tell me first, well, what are the kind of things that you like? Do you like veggies? Do you like beef? Do you like fish? And then I could probably direct you toward the kind of institution that might be helpful for you, right? That's generally the way that would work. But so just to point some things out here, I think you know most of these. You wouldn't deal with most of them, but some you might. What's new that I've seen here is MDI, minority depository institutions. Something I was talking on a call the other day to New York, and within New York, this is something that's growing in popularity. So that they, in a nod toward trying to have more representation out in the banking world, dealing with again low to moderate income areas, maybe high areas where folks are of color. There are specific institutions that will work with that group and with all the folks in their particular needs. So it's good to know that there's lots of other, in a sense, types and flavors of banks, okay? What do they all differ by? What are the things that make these all different? Well, the things that make them different are the charters that they have, which is what tells them what to do. Their licensing, or what's called the CRA, which is Community Reinvestment Act. And that's why banks often work in your neighborhoods to do things, to do projects and so on. So, that's the kind of thing, that's why it's the CRA that banks have to do that, have to do local fundraisers or help the community out or make sure that the lending is equal across everyone. So if you found one of the banks up above, like an example, a shadow bank that does not comply with the CRA, it's not following the Fed rules, so it's in a sense more of a rogue, but it could offer you higher investments too. What differs from these is their control, Fed, state, or local. The products differ, the size is different, the technology is different. So that's kind of what makes these different. But our focus today, I want to get us back to the two main stars of today, which are banks and credit unions. So let's start with banks. So the characteristics of banks will help you know a little bit about some of your decisions and some of the questions some of you had, which was about, well, which one do I pick? Well, my role as a financial counselor is never to tell you which to pick. It's to tell you what its characteristics are, and then you decide for yourself. So banks are for-profit institutions. They're in this to make money, no big secret, and all their extra profits go to their shareholders. They're usually much larger than credit unions, national, regional, you know of a lot of them. That means they have more branches, more ATMs, more products to offer. They also, since they're bigger with deeper pockets, they often have the capability to have more advanced technology too. So maybe it's a little bit more slick. Maybe it's a nice looking place, and with 1,000 branches to it or something. So your convenience is there. One thing that I did find out on the interest side is that the banks, if you're in a bank, there's not an upper limit that I know of on their interest. But I did find one, and I found one out in Colorado, apparently Colorado. And I know there's no one on the line from Colorado, by the way, so I thought I'd bring it up, that your interest rates on loans or on credit cards could be up to 45%. I'm not saying everything is, it's just saying it could go up there. In general, they have to be competitive like everyone else. They do pay federal income taxes, so that's part of what eats into their profits, and that's the whole picture on the bank side, okay? Let me go with the credit union side and see if there's any questions people have after that, okay? So on the credit union side, these are typically smaller, more local, and I can't, give total specifics. I can give you generalities, and you have to decide whether this is something you want to investigate or not. But they're nonprofits and they're owned by their members. So they're not simply just a large institutional bank. They're typically smaller, and usually what binds them together is some affiliation, like they're part of a union, or they represent a church, or they represent some affinity group. They organize under some kind of a charter that says we are organized for this purpose. But again, most of them have open membership as long as you pay a very small fee. The fees differ, but they're not that big. But so you have to, in a sense, become a member of a credit union. You're not a member of a bank. You don't own the bank. You actually own shares to some degree of a credit union because you're a member. What that allows them, and people ask me, again, what's better? Well, I'm going to just leave it to you. What's better? You can often get higher interest rates from the credit unions as a result of they have less, they don't have to pay the federal taxes. So they have some little bit more leeway. You may find them to be more friendly and neighborly. That's what people often say. It's not to say that a bank can't be friendly and neighborly too, but it's just a different kind of a feel. I almost think of them more like family in a way. Everyone's going to differ, but you find the one that works for you. The good news here on interest, whether on your loans or on your credit cards, they're capped at 18%. So whereas you may find banks in fine competition with them, banks have loans that can be at 18% too. The one difference is banks can go over that if they want to. Credit unions can't. Credit unions don't pay the federal income taxes, so that's a plus for them. And they have different regulations, obviously, than a bank does. But they have this other funky thing that I found in my research that I thought was kind of different. They can use this thing called cross-collateralization. And what that means is that if you are a member of the credit union, and let's just say you have a couple different types of products with them. So let's just say you have a car that you have, partly owned by through them. They have your loan on the car. But you also have a personal loan or a credit card that you haven't been paying. They're able to take your car. They're able to, in a sense, hold your car as part of the collateral on the other part of the debt that you're not paying. So in a sense, there's a cross-collateralization, a commingling, as it were, that they're not separate. So they are able to, in a sense, hold one until you pay the other. So that's an interesting kind of capability that the credit unions have that banks don't. Banks have everything separate. So I'm going to, I guess, stop again and ask if there's any questions again. So let me see again. Any new questions? Send that out to all, open it up the dialogue to you. And Maddie, please let me know if anything comes through. In the meantime, until I hear that, let me answer some more of your questions. I got the high yield one, the person already asked. Another one said, can I open an account with my credit union? Of course you can, as long as you pay the fee and see if they have a restriction based on their membership. That would be up to them. As far as I know, I don't know that they can not let someone become a member, because it depends on their charter and their rules and what's legal. People asked also about, like I said, loans and mortgages. For the most part, those are going to be the same. And in the end, they go back to the Fed to get their money for those. What else? Investments, I'm going to come up on in a minute, so I'll handle those questions there. So Maddie, anything coming through? No more questions. Okay, then let's go on. Again, I always like it when it's interactive. You guys asked a lot of questions before, so please feel free to do it live. But let's go on to investments. Maybe this will raise some more questions. So what products do we have out there? Well, there's three main products that I've covered here: investments, cards, and loans. So on the investment side, this brings us back to a few things we already mentioned, but let's just make sure you know. Investments, for the most part, through either RBs is retail banks and CUs are credit unions, by the way. What products can you pull out of either one? CDs, I already mentioned. Those are where you commit money for a year, 2 years, 5 years, 10 years, and they give you a committed rate of interest back. The problem is, of course, your money is tied up. That's the downside. As with most investments, you have to commit the money for a period of time. When I say investment funds, I'm just thinking that as a kind of a general thing. A lot of things you may be interested in looking at for those that are looking for a better return on your money. You may or may not get this through a bank or a credit union, so you may have to go to an investment advisor for this, but let me just tell you what some of them are. I call them pooled investments. So there's things that are called ETFs, or exchange traded funds, or mutual funds, or index funds. These are basically, I think of them as pooled investments, where you're not buying a specific stock or bond, but you're buying a kind of a little piece of each through a combined fund. Again, it goes back to whether this is actively managed or passively managed. If it's passive, it means it's like you're copying an index, like the Dow Jones or the S&P 500. It mirrors that. There's no human, it's just a computer, and you pay less for that capability. If you wanted to have an investment advisor, a person, a human, to advise you, you pay a lot more for that. You'll pay a certain percentage of your overall portfolio to them. It shouldn't be much more than 1%, by the way. They call that basis points. 1% is equal to 100 basis points. Excuse me. Just so you all know, I've had my shots, so don't worry about that. I've had all my vaccinations. And by the way, they just said today we can take our masks off, so I'm good. Retirement funds, they come in a couple flavors. Roth IRA is one that you can get through them. This is where you pay the taxes up front, and then later on, when you're going to take your money out, when you're 59 and a half, you don't have to pay taxes. Another type is on the opposite side is ones that are tax deferred, where you pay the taxes later on. So 401k, 403b, 457 are some of the codes. And in the case of, do I pay my taxes now or do I pay my taxes later? That's what those are all about. Okay, let's move on into, let's move on into the cards. And the cards, I'm sure everyone here knows what the basic cards are. The two of them you might know, one you may not know. ATM is your basic vehicle as your way to get money out of the bank. As you all know, an ATM card takes money right out of your checking account. So it's a direct, it doesn't serve you, by the way. Some people ask me in other classes, does that help your credit? No, ATMs just take money out of your checking account. So no, it does not impact your credit at all. The main thing you do have to have, however, is cash in the bank, right? Yeah, that's an amazing thing. But a lot of people think that, I've had people I've worked with in the past that didn't make the connection. You do have to have cash in the bank to be able to use an ATM, okay? So credit cards are a different story, and I urge a lot of caution with them. Credit cards, as you know, can be offered through a bank or through a credit union. And if it's their own local one, it's a case of where sometimes if you do multiple services at an institution, they may begin to see that you're doing 3 or 4 or 5 things with us. Therefore, we will give you a break on the credit card. But as with anything else, you want to be very, very careful of use of credit. Now, this is my counselor side coming out, that credit cards are great and they should be used responsibly. But recognize that you shouldn't be using them as just a way to keep your expenses going every month, or use a credit card to pay another credit card. Those are warning signs, and I would urge you to seek some kind of assistance if that's the case. Credit really is an important thing, and unfortunately, it can get you into huge debt very, very quickly. And as a credit counselor, I can just tell you it's much easier to go down in your credit, meaning your credit scores, than it is to go up in your credit. It takes much longer to build it back up, unfortunately. So I do want to point out this thing called a secured credit card. For anyone on the line who is looking to start your credit or build your credit, just be aware of this product. Not all banks or credit unions offer this, but if you're just starting out, take a look at a secured credit card. It's one of the ways for you to put some money as a deposit with a bank, and basically they issue you a credit card with the limit that matches the amount you put on deposit. So you can use it like a credit card, and you use it for 6 months to 9 months. And then if you use it responsibly, pay for gas, pay it off each month. Pay for some groceries, pay it back off. Pay for some shoes, pay it back off. It's the process of you paying it off each month on time. That's what builds your credit. So a secured credit card is a great vehicle for those that have poor credit or no credit. And then finally, there's loans, which you all knew probably was coming. But one of the big things you can get from a product out of all banks and credit unions is various types of loans. Your interest rate's going to be different. So again, there's no point to me even telling you what's out there. You need to check that out yourself. But for home, school, car, and personal, those are your classic ones. Most people that I know of anyways, and you may know, don't have the cash to pay for a house. Here in the Boston area, that would be $400,000, $500,000. I know some of the folks on the line, because I'm aware of these kinds of things, are in some states in which you could buy a nice house for $100,000, even less. So it really depends on where you live. Let me just point out this other thing at the bottom called a credit builder loan. Again, this is not available for everybody or every place, but please be aware of it, that be aware that if, again, you're in a case just like the secured credit card where you need to build up your credit, a credit builder loan is a case, not even a loan, it's a case where you and an institution like a bank or a retail bank or a credit union agree to build up toward a certain amount. So let's just say you agree to build up to $1,000, and I agree to build that up in 10 months. Well, the math will work nicely. That means I have to pay myself $100 per month until I get 10 months from now to that $1,000. It's a great thing. You pay yourself You're paying yourself the money, really the bank or the credit union. And then at the end of it, you have the $1,000. Because you paid yourself on time, just like a bill, you build up your credit because you did the action of paying yourself on time. Now don't mess up, because if you don't, you're gonna be hurting yourself. And in the end, the good news is you walk away not with the full 1,000. It's gonna be less whatever the fee is. Again, that's where their piece of it is. What their fee is, that's gonna differ from bank to bank or credit union to credit union. Do your homework, find out which works for you. I'm going to move on to online banking and mobile apps. Now, within banks, on the left, you see often many things that are found within banks, and they are the typical kinds of things. So as we get away from paper, there's e-statements, all kinds of ways to access your banking. More and more, we're getting away from the ability or the need. You just get to a point where you almost physically don't have to step in the lobby anymore, right? You can just take a picture of your check, get credit for it. I think it's fantastic. There's all kinds of ways to connect devices to the banking. There's more and more of a merging of all this technology. Which brings us to the next part of this, which is what I'm calling the whole mobile side. And please recognize, again, I'm not here to endorse any specific type of app. I'm just telling you what they are, some of the ones that I've noted here. So if you are one that, as you pick out a bank or credit union, is challenged to help save, there's all kinds of great stuff out there that can help you stay right on top, okay? Which is great. So, if you need to have money put aside, on a certain schedule, it will do it. If you need to have the difference, like called capital or keep the change, that automatically takes what's left over on a rounded off dollar. So you pay something for $1.73, it will take the difference of that, which would be 27 cents, and stick that into a certain account. It does that automatically with everything you buy. Again, it's like throwing your change in a change jar, except it's done through technology. You look them up. They're not all free. Some are, some aren't. That's your decision to look up what they offer and what their costs are. For savings and budgeting, there's lots of things that can help you there too. When I do a lot of the seminars and webinars that I do, this is where a lot of people really just aren't interested or don't want to do things on their own. So the good news is, it's like the good analogy I quickly can think of is, it's like having an automatic dishwasher. I don't know, most people don't want to sit there doing dishes and drying them anymore, but an automatic dishwasher can take care of all that for you, stick them in and push the button. Same concept here. There's ways that you can put these into motion, automatic motion, to have setting limits on what you can buy in certain categories, or ways to put money aside in your savings, move your money to keep you on balance. Again, I totally encourage you to look into them. Paper works fine too, spreadsheets work fine too, but some of these apps will kind of keep you on target. And then I have four others that I noted here, and that is simply ones that are, I think, newer, and they offer other slightly different things. Spender is one for money markets. Money market is a type of an investment. Somebody, I think, asked about it. I think it provides a higher interest rate. You check that out for yourself. I think it may not be as regulated as some of the other types of investments. So again, it's that whole thing of risk versus return. Tip yourself is, I believe, a way where you can transfer money. I think there's other ones I've seen out there too. But if you need to send money from you to one of your kids who's across country or something, there's ways to do that. And then Robinhood and Tycoon have to do with trading of, I believe, currencies and/or stocks. For those that want to kind of manage your own portfolio, we're getting closer and closer to, you being able to do it all yourself. I mean, pretty soon, a lot of these institutions may be fully cut out of the picture. If you can save your own money and move your own money and trade your own stocks and bonds, then you're in a great position to pretty much do it all yourself. On the investment side, Maddie, I'm going to ask if there's any questions again. I will come over here and see it one more time. Any questions? I'll ask again. In the meantime, I'll send that out, see if anything's coming through. But I will also answer the questions that came up on investments. The investment questions that I had, there were three. and I think we covered them, about CDs, high yield accounts, and money market accounts. It comes back to you doing your research. Sounds pretty boring. I've said that over and over, but the good news is there's all kinds of variety out there. Pick the ones that work for you. Read the small print. Do not be taken by what they say in big print. Every single thing you buy or every one of these apps that you use often has little small boxes that says check here, you know, if you want to use this app. What I dare you to do is to stop and read the 18 pages worth of small print of what you just signed up for. So that's just a little tip on the side. Let's go now, since there's no questions coming in, let's go back to another section of the services now. So amongst the things banks and credit unions can offer are, we've covered so far, is some return on your investment, not much. Lots of products that you can get into, including investments and other kinds of online products. But then the services is what else they offer in terms of other types of aspects that may differentiate a bank from a credit union. So let's go over, I have here 7 services. Accounts, they all offer various types of accounts, checking accounts, savings accounts. Of course, the interest is one of your questions. But now we refer back to that sheet that I told you about a little earlier, the sheet being the comparing checking accounts worksheet. By all means, get to know all the hidden potential fees of having enough money, or if they're going to nickel and dime you for this and nickel and dime you for that. In addition, I'd ask this question in today's world. It really, I don't think it costs them all that much to give you extra accounts. Ask them if they don't mind to set up 2 or 3 or 4 savings accounts for you. So you could have one that's just for emergency fund savings, one that's for vacation savings, one that's for your kids' education savings, one for your Christmas savings, whatever. You know, some banks will do that or credit unions will do that and some won't. That may differentiate as well. Customer service, this is what definitely differentiates a lot of places where I live. And this has to do with people. You know, people, whether it be on the phone in trying to answer a question, or you walk into the physical lobby itself and you try to get an answer, I find that people trip over themselves more and more, because I think that's one of the few things that distinguish them. Having friendly people that walk up to you and actually help you. That's kind of a rarity nowadays. It seems like more and more, it's like whether we have people or don't is part of like what distinguishes us. Some are going more high tech and laying off people. Some are getting more people intense so that they're friendly and a warm handshake and a free lollipop, you know, and so it's different as to how they're trying to bring you in and get you to borrow money or to take out an account. Online and mobile apps we kind of talked about. So these are services and products. They're kind of both. FX services. FX, people may not know, stands for foreign exchange. So if you ever see anything to do with FX, if you are traveling or if you need money from another country, or need money wired to another country, the FX, foreign exchange, is often where that comes into play. Some offer, some don't. As a general rule, from what I've seen, you as a consumer get, let's just say, eaten away a little bit on both ends. As you go to buy euros on this side of the country, this side of the water, you have to pay some kind of they take money away. When you're done with your European vacation and come back and sell your euros back to the bank, they again they cut another piece out of it, and they don't accept coins. They only accept dollars, bills. Okay, so that's some of the realities of FX. The old traditional safe deposit box is still out there. If you happen to be one of those folks on the line with pounds of diamonds or gold or stock certificates, there's not as many stock certificates out there as there used to be. But you can always get physical safe deposit boxes for a fee. Check again as to how much what they cost in your area. Checks, all flavors you probably know of, but this is what distinguishes again. If you have many services with a bank, you may find that they give you your personal checks for free. If you have to go and get a bank check to pay for a car or to pay for part of you're looking to get a mortgage and you have to pay the lawyer or the inspector, there may be some that ask you specifically for a cashier's check or a bank check. Again, may charge you $5, $10, $15. It all depends on which bank you're going to or credit union. And then finally, transfers. I know that this is just another general service you find, and this applies both internally and externally, meaning that I know personally within the accounts that I have, the bank that I work at, or I'm not work at, that I use, I'm limited to so many transfers internally. Like if my wife, my daughter, we all have the same, we all share the same bank but different accounts. Then therefore, if I do too many transfers in 1 month, they whack me for that. If I try to do a transfer outside the bank, that usually costs money. All right, I'm going to move on into this last section I'm calling the selection and choices that you have. And then we'll end up again with questions, time for questions, which we still have. So I will go with this. How do you make a decision for all the great stuff we've talked about? We've talked about a lot of choices. I haven't told you numbers, but I've told you, you need to do a little research on picking. It's, again, not that far different from you going to one restaurant versus another. You're going to go down the menus and look at what they all offer for the various selections and what their prices are. And if you go down the menu and you start to see every course out there is like $40 plus, that may be too high for you. If you find another menu that you go to and you find that everything is like under $10 and it looks good and you've seen it, that may be something you want to stop and shop at. So you need to figure out what's important to you now and in your planning. For all the services that I've mentioned, which will you use? Are your kids about to go to college? Are you going to need loans? Do you need a car? Are you looking to buy a house? Those are all things that you'd want to know. How do you make a decision? Number 2, I say here is, these are the basics. Research, ask your friends, and Google the bank. And of course, fill out this cash course comparison. That's going to help you. That's the item that's connected to this webinar. I also have this other kind of set of questions that I've made up for folks. And that is this. From your perspective, always make it from you. Start with you and your family. And think about, what do you need? And then that's going to help you decide, not the other way around. Don't just simply get caught into the lowest cost bank only. That really may not be meeting your needs. So ask these questions. Do you want to branch with people? I know some folks I work with, or some people I know that don't like people. They don't want to deal with people. They want to just deal with technology. So that may not be for you. Are you aiming for the lowest costs? You can do that. And by the way, FYI, I just want to throw this out there. If you want to write me, I would tell you it as well. It shouldn't be a bad thing. I know of virtual banks that cost nothing. There are banks and virtual banks out there that have no costs and no fees. So just be aware that they do exist. Is innovative technology important? Again, from the banks or the credit unions. Are you looking for the latest and greatest in how you can move money, right? Do you need a lot of ATMs? Maybe you're looking more for a bank then. If you need an ATM on every corner, if you need the ability to get at your money very quickly, you need cash whenever you need cash, well, maybe an ATM is for you, or a big can of money somewhere hidden in your house. I mean, you do it however you want. Financially, and then finally, financial institution, is it a fit with you on other levels? Now, these are not monetary questions. They're more like other questions we ask today. So does it fit with you culturally or socially or ethically? And I already gave you an example before. There's what's called MDI, Minority Depository Institutions, of which in areas where there's like a majority of people of color, there are banks or credit unions that are owned 51% or more by folks who are of color. Again, then they offer different services. They are appealing to the groups in their own community. That may be for you. Ethically, I'm not going to give the name, but I'll just say there was a large institution recently over the last 2 or 3 years that has continued to set up accounts for their clients when their clients never wanted it. And they didn't do it once, but they did it 3 times. And so you may say to yourself, well, that's not for me. I don't like that. So bottom line is experiment and diversify. You check out the things, check out the various offerings that are out here, and recognize they're after your money in your business. So there's usually no downside for you jumping out of one institution to another. The only thing that will hurt you is if you have investments like CDs that in fact you get penalized if you break out of them, before you should. So I think that's the main things you want to think about. Those are all the considerations I can think about. I look forward to any thoughts or questions you have. I'm going to summarize now, and then leave the rest of the time for any questions you might have. I've answered all your questions from the registration, and I'll answer any more questions that come in the last 10 minutes. So it's a summary that I have for all the folks in thinking about this whole question of basic banking. Is your mission, our mission as customers, or their mission, I should say, is to find this difference between high tech and high touch. They are, I think, in an identity crisis right now, banks and credit unions, trying to figure out what they want to be to the public. Well, I think that's good for you in a way, because that means that there's a lot of competition and they're trying to find new ways to lure you in. That's the good side. What I think is the downside is this second point. With interest rates at new lows, these institutions are continually trying to find new ways to generate fee income. Interest rates are not giving them a lot of money like they used to on their deposits. As a matter of fact, in the industry overall, the COVID has brought down the whole use of credit cards. The amount of consumer debt out there has gone down considerably over the last year. So a lot of the credit card companies are not making as much interest as they once were either. The last point I leave you with on this is the consumer has to be ever diligent to recognize and understand value versus cost. So one thing I could never do today, or never would do as a financial counselor, I would never say to you, this is valuable to you. Only you can decide that. And you have to recognize the cost versus value equation. If you get a little bit less in your interest return on your deposits, but you get fantastic service, fantastic technology, fantastic access, well, that's something that might be important to you. Or if you get the other way, if you have a totally virtual bank, which takes care of all your banking and credit union needs, all your services needs, you never deal with a person, they can strip down their costs very, very low, and you can maybe go for the low cost. I'm going to ask one more time, Maddie, if there's any questions for folks. So, okay. Here's one that came in. Is there any thoughts about gold banks and Bitcoins? I can tell you that's an area that I have not fully investigated. I can only put that in the category of those are what I would consider risky investments. They have grown a lot recently, but again, it's the longer term that's still unknown. Let me just give you an overall statistic, which I do know from my experience and time in the industry. From an overall trend point of view, the stock market is still one of the best places to put your money if you're in for the long term. You can get on average anywhere from probably an 8% return. Now think of that in today's world of getting less than 1% or less than 0.5%. If you invest in the stock market on a long-term basis, and I mean 10 years or more, the ups and downs will average out to around an 8% return, and it's been doing that for about 50 years. Bitcoins and gold is very, very up and down. I think you have to take a high risk with that. My advice to most people is do not go into risky assets unless you truly are willing to say goodbye to that money. When you are ready and able to say goodbye to that 1,000 or that 5,000 or 10,000, then I say it's almost like gambling at that point. I say go for it if you want to. There's nobody who knows what tomorrow's gold rate will be, or next week's or next month, or else they'd be gazillionaires. The fact is it goes up and down like a seesaw. I'm going to leave you then, if there's no other questions, Maddie, I'm going to just leave you with these resources and say there's lots of things that are here. Please look them up. A lot of the sources of my info came from here. I do want to point at the very bottom, one of my favorites called the Simple Dollar. There's a gentleman by the name of Trent Ham. Now, he has a blog that's kind of been taken over by advertising lately. But in terms of a person you trust and who knows what he's doing, I suggest if you really, really want to learn about money and banking and many other things, take a look at that because it has lots of good info. I leave you all now and simply remind you that you're going to receive this PowerPoint deck when you leave, a link to this webinar so you can see it again over and over. You're going to get the handout called the Cash Course Comparison and an evaluation survey. I hope you will help us to know what you liked, what you didn't like, and also it asks you such things as what do you want to see in the future. I do these 2 times a month. We've already figured out for the year, but we can certainly change it. We can make it change, absolutely, according to what people want. I also remind you of my own email. I'm pmullen@consumercredit.com. If you have questions from this seminar, if you have financial questions that I didn't answer, you can write me directly. I'd be glad to try to answer them for you. What we will have in a couple weeks on May 26th coming up is called Saving for Your Child's College, right? May 26th at 6 p.m. Eastern Standard Time. And by the way, I want to say, it's because of all our California and West Coast friends. I have people on here today from Utah, Oregon, whatever. They asked, hey, can you consider us? So we're doing this at 6 o'clock to accommodate them and others. Any last questions, Maddie, or else we're going to close off? Nothing else. Okay, then we closed 1 minute early. You get 1 minute back of your life. I thank you all so much for being with me today. I hope you'll join me again in a couple weeks. We do these on a regular basis. Tell your friends, and thank you so much. I look forward to hearing from you again as we do our next one in 2 weeks. Thank you all, and goodbye.